But how will these overnight cues impact our own markets? We have our research team joining in to tell you just that. The trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, very good morning to all of you. Rima, let me come across to you first up. What is the market setup looking like today?
Well, it's definitely going to be a down opening, right? The GIFT Nifty, as you pointed out, is currently lower by about 75, 80 odd points. The key level to track will be about 19,250. If you remember, in Monday's trade, the Nifty went down all the way to the 19,257 mark before it rebounded to close above 19,400. So Monday's intraday low of 19,257, which also now coincides with the 50-day moving average, will be a key support level for our markets to hold on to. The global picture is weak. U.S. markets ended with a cut of more than 1%. The dollar index is building on above 103 levels, and the money markets is shut today. But if you see, the other Asian currencies are weakening in trade. The worry is, as Fitch pointed out, that they may downgrade U.S. banks, including the large JP Morgan. The reaction to the surprise rate cut by China, which is far higher than what the street was anticipating. If you remember, the PBOC, People's Bank of China, has cut rates by 15 basis points. In the past, it's always resorted to about a 10 basis points cut. So the rate cut by China has been more than what the street was anticipating, given the weak economic data. But the market reaction is grim. They want more. So it's not that, the Chinese, the investors there believe that this is going to be enough to get them out of that funk. For our own markets, the July CPI inflation is a big shocker, coming in at 7.4%, and we'll discuss this more. But Citi has pushed the first rate cut expectations from the Reserve Bank of India to June of 2024 versus their earlier call of April 2024. Back to our own markets, one more word. There is a clear, dichotomy in way banks are underperforming and the way IT has stepped up and has started outperforming. The month-to-date, performance of the sectoral indices will be up for you on your screen. Back to you.
All right. Okay. Thank you so much for all those cues, Rima. Let's talk about all the cues from the F&O space. Mangalam is joining us with that. Hey, Mangalam.
Good morning. So, on Monday, we did see that stellar recovery that happened from the lows of trade, and the indices closed near the day's high. And that was largely on account of a couple of large caps doing well. The large heavyweights like Reliance, L&T, we saw gains coming in on names like Infosys as well as HUL2. However, it could have been technical in terms of a bounce. The reason why I say that is because the Nifty day's low on Monday was 19,258 and the 50-day moving average was the same. The Nifty Bank as well bounced back from the 100-day moving average of 43,571, went closer to that, and from there we did see a bounce. At no point in that bounce did we see the markets actually go off to the races and get out of danger. Why do I say that? Because one, the FI has continued to write in cash markets. They've sold around 2,300 odd crores, and the Nifty August futures premium compressed from 76 points to around 44 points. And even as the market was moving higher, the India VIX, the volatility index, was moving higher as well. That was telling you that there were adverse positions being added on the index futures side as well. The FI has continued to sell, 440 crore worth selling there, and now the short exposure is at 61 odd %. Even in index options, yes, there was some unwinding of calls, but at the same time, we saw only 22,000 puts being written. So that's telling you that there might not be a big support or at lower levels itself. What is the range that the option writers are playing for? 19,400 call writers, extremely active for a premium of 100 rupees, telling you levels upwards of 19,500 will face resistance. And on the lower side, 19,300 and 19,350 put writers are active as well. So the range of the day should come up for you on the screen. In terms of stocks, just watching out for a couple of levels. Just GNFC has entered F&O ban and Hindustan Copper has exited F&O ban.
Okay, all right. Those are all the cues from the F&O space. But now over to Abhishek, who will list out the stocks to watch out for in today's trading session.
Well, to begin with M&M, they have launched 7 lightweight 4WD tractors. Infosys, Liberty Global and Infosys have expanded their strategic collaboration to bring AI-powered digital entertainment to customers. This is about $1.6 billion. GMR, the board has approved fundraising of up to Rs 5,000 crore via QIP. ITC, the board has approved demerger of hotel business. Vodafone Idea, in terms of the Q1 performance, the net loss has widened both YOY and quarter quarter-on-quarter. Even the margins have declined when compared to both YOY and quarter-on-quarter. So they have written to Telecom Department as well with respect to spectrum auction due payment. They will pay about 1,680 crores of spectrum auction due for August 17, 2023 by availing a 30 days grace period, and when they avail this grace period, they'll pay it along with the interest as well. Indigo Gangwal family to sell shares worth up to 3,735 crores via block deal today. This is the third tranche of selling by Gangwal family in the recent times. So VIP Industries, they have appointed MD and CFO of the company. Penar Industries, they get order worth about 702 crore across various business verticals, and Z has SEBI order come in, which means that SEBI has barred Goenka from and Subhash Chandra from holding any key managerial position in Z Group, holding any key managerial personnel in demerged entities as well, and taking managing director position in Z Entertainment Sony merged entity. Back to you.
Okay, all right. Thank you so much, guys, for joining us and prepping us up for this trading day ahead. Time for a short break now. When we return, inflation in July accelerates to its highest level in 15 months. We'll get you more on that on the other side.